Hello everyone, it's Vera here from Meadowbrook Financial. I got my colleague here, Marnel Garcon, and today we're going to be going over a topic that I'm super passionate about. It's a never-ending debate, the 15-year versus the 30-year term fixed, and what is more beneficial for you. Now, I just want to make a disclaimer. There's really no right answer. It's a personal preference, and remember, we work for you guys. So we lay out all options, and at the end of the day, you choose what makes sense for you in your life. So, Marnel, what do you think about that topic? When you hear the 15-year and 30-year fixed controversies, what do you think about that?
It's something that I get a lot of calls about, right? Which one is better? And oftentimes, for the most part, it's typically refinances that talk to me about whether or not they should go into a 15-year or 30-year. But as of late, I do get a lot of phone calls from people that are looking to pay off their mortgage a lot sooner, purchasing a property. So the 15-year option comes up a lot. And the truth of the matter is, we go over, like Mike says, all options, and then you, as the borrower, let us know exactly what would make the most sense for you.
Now, what would you do if you were doing a refinance for yourself or a purchase? What's your style?
So for me, I honestly can see the difficulty in choosing if you're a first-time home buyer or someone looking to refinance, what would actually make the most sense for you. Me personally, I tend to like a little bit of cash flow. I tend to want to have flexibility with my lifestyle. So for the most part, I would probably lean towards a 30-year mortgage rather than a 15-year mortgage for that exact reason.
That's interesting. That's interesting because, I've been seeing a lot of sources. And again, I really want to put out there that I think both are great, especially if you're very aware of your own finances. Because nobody's going to know that better than yourself. And there's been some sources that I go to, and they swear by the 15-year. They swear by it. There's don't even consider a 30.
Yeah. YouTube is funny with a lot of these things. I see a lot of videos from professionals or quote unquote professionals that talk a lot about why a 15-year makes sense. And on paper, look, it does make sense. Both options are there. Yeah. But again, I come back to it's whatever works best for you. Everybody's different, and I can absolutely see the benefit in each one of them. So where do you lie in that respect?
Now, for me, I'm going to have to agree with Marnel. Now, if you want to know how our team works, we're not the type of people that are going to tell you to do something that we wouldn't do personally for ourselves. Right. So this is exactly how I live my life. I'm a huge advocate for the 30-year fixed mortgage. Honestly, the way I look at debt is my best friend. I love borrowing the bank's money or institution's money. I don't like touching my hard-earned money ever. If I'm going to do construction on my house, I'm going to take out a loan. Right. If I'm going to go get supplies, I'm going to take out a Home Depot loan.
Especially rates as low as they are right now.
As low as they are. Makes sense. I'm never touching my own money. And Robert Kiyosaki says it all the time. The rich get richer because they're never touching their own money. That's the only way you could really accelerate in life is if you have that cash flow so you can jump into other investment opportunities. Now, when I hear the 15-year defense, they say prioritize and get one of the biggest debts out of your name as soon as possible in 15 years. But to me, I don't think money is the biggest asset, or I don't think clearing debt is the best thing for you. I think time is the most precious thing we have. So if I prioritize, this is the way I look at it, and that's why I have a negative feeling towards it, or I have my reservations, you can say, for a 15-year. So if I just double down and prioritize on paying off a 15-year mortgage. Now, I'm 26 years old. I'll be 39, 40, and I spent all that time. God knows, where the value of the dollar is at that point.
Right.
I'd much rather take out two 30-year loans. Now I have two assets, two houses.
I was just going to touch base on that because, especially with the market the way that it is now, right? Imagine you bought a home and you're in a 15-year mortgage, right? And 5 years goes by, and now you have a ton of equity in your property that you can pull out and actually go use as an investment property or something else. But you're stuck in a 15-year mortgage, and now your debt to income ratio is much higher.
Gotta get the knot just right. Perfect. Oh, somebody just completed their Meadowbrook mobile app. W-2s, bank statements, pay stubs, driver's license, full package. I'll pre-approve them by the end of today.
I wish more people would just use the mobile app. This is crazy. Just use the mobile app.
It's the best solution, dude.
Isn't it? In terms of qualifying, because of the simple fact that you went for the 15-year mortgage, and now you can't qualify. You have all of this money, right? Your home is rich with equity that you could pull out and purchase another investment.
But a $5,000 mortgage as an expense.
And then you have two mortgages now at 30 years, relatively low, that you can manage. But because of this 15-year, you can't qualify for the other one.
Exactly.
So I tend to think about that more than anything, and especially since, look, guys, you do have options out there. Just because you took a 30-year mortgage does not mean that you have to pay it in 30 years. If you're a structured person enough that you can,
good money manager,
right? Speed up your own mortgage, make an extra payment or two, double down on payments to knock out a 30-year to a 15-year. Do that.
And guys, if you want to know how to do that, if you look at my last video about amortization schedule, it will teach you exactly how to pay off a 30-year loan, or utilizing a 30-year loan to pay it off in 15. And another thing, very important point, is that life is random. So if you take out a 15-year mortgage and maybe 3-4 years happen and an emergency happens, and you need those funds for something else other than your mortgage, because it's not always going to be for investment opportunities. Which, if you do have that cash on hand, it should only be for investment opportunities, not for partying or anything. But back to what I was saying, like if there's an emergency and you need those funds to take care of whatever that emergency is, and you miss that payment that you already finalized those terms on the 15-year, and you miss that payment, now it's a stain on your financial profile. You have that record reported on your credit report, and when banks see one late payment, forget about it. You can't take out another loan. That's all it takes. One late payment on your mortgage, and now it's going to be super hard to take out another loan in the future with a bank, and you don't want to do that for yourself.
And that's a very wise thing that Mike just said. I mean, look, we're still in an environment where the unexpected happened to a lot of people this year, right? With COVID. Imagine knowing that you're financially stable enough to take a 15-year mortgage, right? And you've saved up and everything else, and you're making your payment on time. COVID happens, and unfortunately, one income drops off. Where you could have restructured everything with a lower payment, having a 30-year mortgage, now you're tight with one income trying to make it happen with the 15-year. So going back to what I said before, if that person had a 30-year mortgage that they were treating as a 15-year to begin with, now you can relax, go backwards with this pandemic or whatever crazy thing happens in the future.
You're basically cherry picking when you want to make those aggressive, like if your mortgage is $3,000 every month, okay, you got a bonus at work, or you want to scratch off lottery, who knows? But then that month you pay $10,000, and you're shaving those years off the back.
Exactly.
And paying your mortgage off in 15 years is the same thing as just taking it off in 15 years. But 15 years, like I said, you'll be forced to be responsible month to month, and that's just too much pressure for me. That's way too much pressure for me.
And to be honest with you, being an advocate for the 30-year, I can look at the 15-year also and see a lot of positives. Again, if you've purchased and you're in a 30-year and it's been 10, 20 years, and you see the rates being as low as they are now, and you're comfortable with your mortgage payment, but you don't want to save quote unquote money, you want to save time. Time is a great way to save, right? So now you refinance that 20-year into a 15-year mortgage, relatively keeping your payments the same, or especially with the rates the way that they are now, you might even lower it by $100 or two.
And that's why we keep harping on nobody's going to know your financial situation better, because honestly, if you could put 25% down with a 15-year term and it doesn't affect you in any way, then obviously there's going to be no better way to take out a mortgage for a house. Right. But if so, this video really wouldn't apply to you. But if you're making usually like the average income and you're going for a house on Long Island, we have to make the most out of our money.
Right.
So that's why I think the 30 year is the best tool, especially the fact that what Marnel said here, we're not going to be getting hit with any prepayment penalties if we're paying it off early. Yeah. So that's, I feel like, is the ultimatum of why the 30 year, for me, beats the 15-year option.
Same exact thing.
Because for me, how I live my life again, I'm always going to do the minimum down payment with the longest terms. Hell, I'll take a 40-year term if it existed, and I'm going to go with that interest payment, because you see it all the time. Like when you go to, let's say you're going to do a surgery, they give you usually two options. Mike, would you like 6 months no interest, or would you take 5 years with 17% interest? Right. The interest never scares me. I'm going to take the longest term because, as Marnel said, I want cash flow. I want to be liquid. If I know a stock is gonna do well in the future, or if I know crypto is gonna go up, or if I want to buy another investment property, I have the option to diversify my money. And then in 15 years now, we would be a lot farther with our finances, a lot more return on our investments.
Yeah, and I agree.
If we had the option and the flexibility.
Guys, the truth of the matter is, I think Mike and I share the same sort of values. So for us, it's easy to talk about it because we're in the business. But for a lot of you, you might be looking at this video and thinking, well, I would probably want the 15 year. Again, it's based on what you want to do. I like to go out. I like to travel. Yeah. So for me, when I'm looking at things like that, it makes sense for me to have that right balance, right? So not tightening up on something like a 15-year for me makes sense, because if I can, make more money and then just pay it towards my mortgage, I'd rather do that than kind of lock myself in definitively to a higher mortgage payment. That limits the car that I want to buy, that limits the expenses that I have, that limits all of the other things that I would want to do personally. And look, for some people that makes sense, right? You have kids, your kids are going off to college in the next 15 years. Maybe you're thinking about that, getting rid of a mortgage payment so that you can put your kids through school. Makes perfect sense. But again, you can do the same thing with a 30 year. That's just
So guys, we really want to hear your feedback. Comment below, DM us, tell us what you think. Is the 15-year better, or is the 30-year better? And
tell us why. We just told you why we think that, but you might have a better option. So tell us why you feel one over the other.
Okay, guys, have a great day.
Enjoy, guys.